north of the border, a trio of Canadian crypto exchanges are confirming plans to merge. Joining us now to discuss is Kevin O'Leary. He's the chair of O'Leary Ventures, and Dean Skurka. He's the president and interim CEO of WonderFi. Welcome, Kevin and Dean, to the show. So the news is WonderFi, Coinsquare, and CoinSmart have revealed plans to merge, creating what would be one of the largest crypto trading platforms in the world. And I see shares of WonderFi surging nearly 50% yesterday. So tell us a bit about what prompted this merge.
Yeah, absolutely. This came about, I guess, originally when Coinsquare and CoinSmart had initially entered into a transaction to combine the two companies that, for certain circumstances, fell apart in January of this year. WonderFi saw a strong opportunity to act as the bridge and to revive these conversations and potentially looking to solve some of those structural issues through WonderFi. And so really, throughout those discussions, what came clear was the opportunity to combine these three companies, three leaders in the Canadian industry in the digital asset sector, and three of the largest crypto trading platforms in Canada. Really, the opportunity spoke for itself, and the companies jumped right in.
Yeah, this merger will result in almost 1.7 million users and more than $600 million in assets under custody. At the time that Canada is set to tighten restrictions on crypto exchanges, according to some CoinDesk reporting we've been doing. Kevin, is this a reason to merge?
It is, but you've touched on the narrative that started last December around the Senate hearings of the FTX implosion, and it's continued on. And I learned something in Washington when I testified there that I did not see coming, and now I realize that it's accelerated. Lawmakers have reached the point of fatigue in terms of the crypto market, and they've essentially released the hounds to regulators. You've seen this manifest itself in these very serious charges on Binance that have occurred in the last week, and what happened with FTX and the investigations going on there. There's no longer any sympathy in Washington for any exchange, broker-dealer exchange, that is working as a rogue entity, not under a regulator in some jurisdiction. And, from the investment point of view, it was wildly profitable. The good old days of crypto, when you could work outside of the regulator in the gray zone, issue your own tokens, do whatever you wanted, completely unencumbered by the cost of compliance. You could argue that was the best economic model crypto will ever see, but those days are over. And now investors like me are seeking jurisdictions where we can invest in crypto infrastructure, because I'm still a believer in the potential of crypto in terms of how it's going to revolutionize financial services and the potential it has in payment systems and everything else. But I can see now from what's going on with the litigation between regulators and all of the exchanges that think they can operate the way they used to in the old days. I mean, I almost feel sorry for them. That's why I've really focused on places like Canada, where I can invest in 100% compliance. This was a necessary merger. The cost of compliance is expensive, and the only way to offset it is scale. And what that company's done, WonderFi, is create a behemoth in Canada. They are the de facto standard for compliance. And indeed, in our operating company, we've moved our assets to Canada because we're able to stake there. There's enough tokens under the regulatory environment that we can get full exposure to the volatility of crypto and do it on a way that we can report to our compliance departments and tax regulators. In some way, that model that just occurred is the future of broker-dealers attached to crypto exchanges. I think it's going to get copied in many other jurisdictions. And I think, the days of the Wild West, well, they're over.
So how would this structure ever look like? I mean, I guess what you're calling the exchange, what, WonderX, Coin Wonder? I don't know what you guys are calling it, but how is it going to be structured? How did you break up? Is it it's a complete merger of the three of you guys, or are you guys each one kind of taking a part? How is this looking? How is this going to look like? And also, what makes Ontario, because this is going to be regulated by Ontario, correct? And more so than it is than just a Canadian federal regulator. How does that model of provincial regulation compare to what we have in the United States?
Well, let me explain something about Canada. It was the very first jurisdiction, through an order of the Ontario Securities Commission, to issue a license that allowed for a Bitcoin ETF. That was the first, and that was years ago. And then an ETF, an exchange-traded fund for Ethereum, also the first in the world. You should be aware, and this is known within regulators around the world, that regulators talk to each other almost weekly. I don't care if you're in Abu Dhabi, in Zurich, Switzerland, in London, England, in Washington, D.C. The global banking system is defined by regulations, and many of them, excuse me, are very current with each other. And so the OSC, you have to assume, is talking to the SEC. Canada, from that perspective, may be the guinea pig that is forging forward with all kinds of regulation that is effectively working. Within this merger, you find a license to stake. That's pretty rare in the US. Within it, you find a license around 34 different tokens that are permitted on these wallets. And indeed, it's done in a way that you can't commingle assets. So what happened with FTX is highly unlikely to ever occur in the Canadian market. The point is, if we want, and the crypto community wants, and crypto investors like me want, to fit into the existing global financial services system, we have to tuck under the regulator. So I no longer have any interest in going to war with regulators, in litigating regulators, in suing regulators. That is not the future of crypto. The future is to find the pathway to fit into the existing banking system, so we have an on and off ramp to fiat in every jurisdiction. I don't care what country you're in. So right now, if you're an investor, you have an opportunity to invest in one of the world's largest compliant broker-dealers attached to a crypto license, fully regulated. There's no war going on here with the regulator. There's nobody suing anybody at the regulatory level. I think that whole thing that narrative is insane, and it's proving to be a very bad outcome for shareholders in other jurisdictions where they're holding shares in companies that are effectively declaring war with their regulators. That's just plain stupid in my view.
So, Dean, how is this going to be structured, though? I mean, it's an interesting merger of three different exchanges. Are you breaking up responsibility? How are you integrating these three different companies together? How is that going to be structured?
Excuse me. Yep. So today we operate three crypto trading platforms across the various companies. One of the first immediate steps that we'll take will be looking to consolidate them through a unified technology stack. And we're in the early processes of evaluating the various technology stacks that are incorporated across the three companies and identifying, the best path forward, leveraging one tech stack, which will create a ton of operational synergies on the back of that. Once we have that in place, from there, we'll look at the various brands under our umbrella, identify the specific target audiences that they speak to and work well with, and identify if there's a path forward with multiple brands on the longer term basis.
And is it equity? So you're going to have three going into one combined company where you'll split up the equity. I mean, I know this is kind of in the weeds there, but it is kind of interesting that how are you allocating that kind of equity? Is it based on market cap? Is it based on volume?
Yeah, so WonderFi was a public company, CoinSmart was a public company as well, and Coinsquare was a private company, which obviously made this three-way merger quite complex. But all of the valuation metrics that were incorporated landed, sort of in the final details of the transaction that were released yesterday.
I just wanted to touch on a point that we've been reporting on at CoinDesk, which is that Canada is tightening rules for crypto exchanges. Binance, Coinbase are still in talks with regulators to stay, but there are exchanges that are leaving. I believe Kraken being one, or no, rather Crypto.com being one of them. I wonder if that kind of pressure, you're feeling that right now in terms of more heightened rules, keeping money separate in different custody accounts, being more diligent about that. Kevin, you want to have a go at that?
That makes me more optimistic as a shareholder. I saw what happened to Kraken when they dealt with the regulator in the US and, of course, shut down their Australian operations as a result. My message to the entire industry, everywhere, because I'm an investor internationally, globally. If you can't stand the heat, get the hell out of the kitchen. If you don't know how to work with your regulator, I have no interest in investing in you, and you will eventually be put out of business, because it's clear now that there's no sympathy anymore for this industry in Washington, D.C., the number one regulator on earth, the SEC. And so frankly, this is a personal opinion, all of the pioneers of crypto, all of the rogue entities, all of the players that built platforms outside of the jurisdictions of compliance all around the world, I bet you within 36 months to 5 years, they're gone. Replaced by managers who understand how the financial services systems work around the world. The great potential of crypto is to find its place amongst the world's banking system, and that's why I'm investing in it. That's why I endorse this. The fact that other players can't handle the heat in Canada, sayonara, I don't care. If you want to play in Canada, you've got to be compliant, and you have to sit down with your regulator on a quarterly or monthly basis to figure out the direction of the services you're going to be providing. And that's going to be the same in the US, it's going to be the same in Zurich and in London, England, and in Paris, France, and in the EU. That's the future. And so what I'm doing as an investor with my capital is going to every geography looking for who's the next WonderFi that hasn't been able to make any money because they were competing with rogue operators that had no compliance costs. I want to invest in them because they're the future. That's what's going to happen. All of this stuff, all of this cowboy stuff, gone. It's over, and you won't get any institutional capital into that anymore, and it's going to have some costs. There are platforms and players out there that are going to get sued into the Stone Age. And I just want to, and that's just too bad.
But I want to quickly correct myself there. It was blockchain.com and Deribit that are thinking of leaving. Crypto.com wants to remain. But Emily, did you want to go ahead?
Yeah, sure. Kevin, I just want to follow up on something you said. So are you basically saying that Binance is not going to exist within the next 36 months? Because it sounds like that's a little bit what you're implying with your last statement.
Binance has two options. Sit down with the regulator, pay the penalty, disclose ownership, because in my opinion, you're asking me an opinion, I'm just an observer. I've made many comments about the demise of FTX, the FTT token, the BNB token. There are some major questions that now come to the fore about Binance that were also asked of FTX. So right now, the Binance narrative at the congressional level, at the regulator level, is you got $64 billion in a token that is basically illegal if you wanted to fit it into the banking system. It's in two wallets, 97.3% concentration. Who owns them? Unknown. Who owns Binance? Unknown. If you want to get a license in the United States after paying whatever it's going to cost to clean up all of these charges, you're going to have to disclose that. Not just Binance, any platform is going to have to do that. The reason there was war between those two behemoths, FTX and Binance, was that FTX could no longer get licenses because the 20% ownership held by Binance would not disclose ownership, and you have to know your client at the cap table level. So Binance has the choice to make. They can remain in the shadows as a rogue entity, very profitable, and you have to commend ZZ for what he's built. But if he wants to play in the real world and in the world's largest market, the US, he's going to have to disclose who owns them and who is backing that token. And Binance has the same risk that FTX has. If there's a run on the bank of that token of 64 billion, they don't have that much cash. It'll be the same outcome. And that is the risk that has right now. And frankly, regulators are tired of it. They don't want any more hearings. I was there. I talked to those senators. They're just pissed off. And they've had enough of this. And they're going to start squeezing hands like lemons. And you're watching it happen with Binance.
And what do you think will happen with Coinbase?
I don't understand why a public company, and this is a personal opinion, okay? This is not policy, and Coinbase will drive its own mantra and what it wants to do at a board level. Litigating your regulator, in my opinion, is a really stupid idea. It's better to sit down and work it out. If the US regulator doesn't want staking or lending, so be it. They're going to have to work that out. But I don't think the outcome is going to really work out for shareholders there. And I would argue that management is going to be put under tremendous pressure to resolve this problem. You got to read the room. You have to read the writing on the wall. Since December, everything's changed. It's not a free lunch anymore. And if you don't understand that, you will be in the dust heap with those great pioneers that founded this industry that now have arrows all through their back.
Kevin, I want to bring up a litigator we spoke with a couple weeks back, Moskowitz Law. And I understand they're suing several celebrities in class action suits, yourself included. They're saying that, you can't promote a platform that sells unregistered securities, in this case, FTX they're talking about. They also say that you must say how much you are being paid, otherwise you're violating anti-touting laws. I wonder what your thoughts are on these celebrity lawsuits.
I think, I can't speak on the merit of them because they're in process in the legal, but I completely agree that you should disclose all of your compensation, which I've done. And I think the outcome of what happens with FTX, I mean, I'm a shareholder there in both FTX International and FTX US. I can't count how many lawsuits there are anymore, and the outcome will be determined by a very long process. And the narrative on FTX now has moved away from the salacious stories that were happening on the island to basically recovery, trying to figure out how much cents on the dollar is going to be recovered through the 100+ entities that went into bankruptcy, through the efforts of John Ray and all the litigation. I think, it's just another part of the story of how going forward, we're not going to have many opportunities to have other FTXs because exchanges, broker-dealer linked to exchanges, those structures are going to be highly regulated, even if there's any licenses issued. And frankly, I think for the crypto world and the potential, and I tell people this all the time when I'm asked, there's nothing nefarious about Bitcoin or any piece of crypto. It's just software. Software doesn't have a bad heart. Software is not lecherous. There's no fraudster in a line of code of software. It's the people that manipulated the system that have taken down this industry in the way that it's been, really beaten up. And now it's a chance to turn all that around, doing exactly what happened up in Canada. Play by the rules, build a business, and I think Dean and his team are doing that, and that's why I'm an investor.
All right, we'll leave it there. Kevin and Dean, thank you for your time. That was Kevin O'Leary and WonderFi President and Interim CEO Dean Skurka.